Okay, hi guys, welcome to the FX Street webinar. My name's Ian Coleman. I'm one of the traders and analysts at First to Trading. Okay, we supply analytical reports on a daily basis on the FX majors and crosses, and also trade recommendations throughout the day. Okay, today we're going to basically look at as many currency pairs as we can. I always think it's a good idea towards the end of the calendar month, especially the end of a quarter. Of course, we're coming to the end of the second quarter of 2012, to look at longer term time frames, look at chart formations, look at patterns, look at price action, look at bias, okay, and try and decipher where we think the trend's going to follow through to. Okay, so we'll have all heard the saying, the trend is your friend. It is until the trend is over. Okay, so we're going to basically be looking at some medium term or even long term forecasts, and then break them down through different time frames to try and build positions. Okay, so what the objective of today is to give an outline. It's only my view of the market. Okay, these aren't direct calls to action. I've got to say that because I'm not allowed to. I'm allowed to give calls to action on our site because we're FSA regulated. I'm not allowed to give direct calls to action on analytical reports via FX Street or other sources. But you'll obviously get my gist of what I'm looking at in the coming weeks and months. I'll just talk you through some of the analytical tools that I use on my charts. These are CQG charts, okay? So it's a basic candlestick chart. The outlined, the yellow boxes, let's just get my marker, okay? These highlight me to what I consider relevant candle formations. So what I'm looking for inside Arami candles, and that basically an inside Arami candle is a candle which is completely engulfed by the next candle. Okay, so it's an inside Arami, or I actually prefer to call them outside bars. Okay, so I want to see the second candle to completely engulf the price action of the first candle. So here, on this change of trend, we have an outside bar. So the high is higher than the previous high, and the low is lower than the previous low. And that warns me of a change of direction, because basically what that is showing is here, we have this three wave correction higher. Sorry, it is a bit messy, this tool. Okay, and then the bulls basically lose control of the market and the bears take control, because they've completely reversed that previous month's trend. Let's just clear that off. Okay, so that's the inside Arami, followed by an outside bar. And the other chart formation that I like to see is obviously the outside bar or the engulfing bar. So we've got one here. Okay, so this basically is a change of sentiment. So then what we're looking to do, we're looking to try and find trend. We're looking for reversal points around these reversal signals or bars. We're looking for strong Marabuzo bars, and a Marabuzo bar is basically a bar that opens near the low, closes near the high, or opens near the high and closes near the low. Okay, so it's a solid, strong, trending price bar. Okay, and when we see an a Marabuzo bar, what we're looking for is we're looking at either selling at the close of that bar, or we're looking for a retracement up to what we call the Marabuzo level. And the Marabuzo level is the 50% mark of the open and the close of that candle. Okay, so here highlighted on these charts, you can see these pink lines. These are Marabuzo lines, okay, and they will highlight us to the 50% mark. Now, I'm quite fanatical about fib levels. and obviously one of the prime fib levels, apart from 61.8%, which is the golden ratio, is 50%. So it basically tells us a lot of price action will hover around 50 or 61.8%. So it's just one of those things that we can note, and we can note easily. And you'll see as we're moving through these charts today that a lot of the time when we get that strong move down, we'll be able to get in at a cheaper level. So we won't have to sell at the close. We can actually look for reversal or continuation patterns, I should say, around the Marabuzzo level. Okay, the other analytical tools that I have on my charts, quite basic really. I know it looks quite complicated, but it's not. I've got an Ishimoku cloud, and really my main purpose for that is just to use it for support and resistance. Okay, and I've got some exponential moving averages, okay, which also act as support and resistance. Then I've just got an RSI down the bottom. It's actually got a 15 setting, not a 14 setting, which most traders use. And what I'm looking to here is, again, I'm not particularly bothered about oversold and overbought extremes. What I'm looking for is a bias. Okay, if it's trading above the 50 line, and this is going down really into shorter time frames, not the monthly charts, but if it's trading below the 50 line, then I want to be bearish. If it's trading above the 50 line, then I want to be bullish. Okay, and I'm looking, as I said previously, to these larger time frames to try and break down to just so I have the knowledge of whether or not I'm trading corrections or whether I'm actually trading with the trend. We of course do not wait to trade with the trend all the time, but a lot of the time we will look for corrective sequences. So we'll say we are bearish in this pair, but we're going to look to sell rallies to X, Y, and Z, and then we'll initiate a trade when it actually gets to our trigger level. Okay, so we're looking to sell into the corrective sequence. Okay, so that's enough about the chart. So first chart that we're going to start with, as normal, because everybody likes to look at euro dollar, is the major currency pair. Okay, and here we've got a monthly candlestick chart on. Now, the reason that we look towards the monthly, towards the month end, is because we can get what we call AMRs, which are acute monthly reversal candles. Okay. Now, again, what I look for in an AMR is inside bars or outside bars. So here we've got an outside bar, here we've got an outside bar, and here we've got an outside bar. Here we actually had a pin bar or spinning bottom, or whatever you want to call it. Okay. And I want to break down this chart pattern to give me an indication of where I want to be looking at. Okay. Now you can see that a lot of these inside sequences are in three waves. Okay. Now corrective sequences are in three waves. So we've got this large wave down. Okay. 1, 2, 3. Then we've got this next wave down to this side. Okay. So we've got this large channel. Has it got more room to maneuver to the downside? Well, yes, because the channel base is here, okay, which comes in around 1100, and this, I think, is another three-wave sequence to the downside. So when we break it down into shorter time frames, we're going to note here we've got 1, 2, 3, 4, 5, and then we have this corrective sequence back up. Okay, and now I believe that this is the next sequence to the downside. Now this could be in three waves, aggressive three waves, or it could be in a 5-wave sequence. But just clear that off. What we have got here, okay, is we've got a decent Marabuzzo level at 128.02. So 50% of the open and the close of the May price action. So we want to put a horizontal line on there. And also notice how it's a bit of a confluence area coming back here, okay, where the cloud sort of held up price action. We've got this outside bar. So it was support, which we can see, and it's now becoming resistance to the upside. So we've got this level 128.02. What also should be noted here, let's get back to my tool, my drawing tool, is this sequence here. So these moving averages are telling me that the bias is to the downside, okay, because I'm trading underneath, okay, and then I get this inside bar here, and this is from April. So we've got that inside bar from April, which basically shows investor indecision, okay. The market fails to break to the upside. In fact, for 2 months, we basically traded in front of this candle bar. So we had all this indecision. It then breaks to the downside. As it breaks the candle low, then obviously this is our signal to get short. So we'll just move that off and then we'll break it down onto other time frames. So what I'm trying to show you today is basically medium-term forecasts and how to trade them, okay? Because there's one thing, you know, saying, well, I think it's going to go down to that level. You might have to have 1,000 pip stop if you're just trading on a monthly chart. But if you've got deep enough pockets, that's fine. There was actually a report, and some of you might have heard this before, because I've said this before, that was done by the SCA, the Society of Technical Analysts. It was one of the guys that was writing for them, and he basically back tested that if you just traded off AMRs, acute monthly reversal candles, over the last 11 years, and traded in one lot, so 100,000 units, I think he said that the actual net profit on 4 major currency pairs was something like $500,000. Okay, so they're not to be ignored. Okay, chart patterns are chart patterns. Doesn't matter how high the time frame is or how low the time frame is. But what we want to be doing is we want to be getting a bias off the higher time frame and then moving it down. It's like a pack of cards. Okay, so say your monthly time frame is your aces, and then as we break it down, we get our other picture cards. You know, and as we get down to a 1 minute candlestick chart, if any of you guys trade down to those sort of time frames, then that's sort of, you know, your 2 or your 3 or your 4. That has less relevance on the market, and obviously a lot more choppy price action when you get down to those shorter time frames. Okay, professional traders call it noise. Okay, bank traders that I used to talk to would say all the intraday charts are noise, and they get the bias off these larger time frames. Okay, so then we break it down again to the weekly, and this is where we see this 5-wave pattern. Okay, if we put, and I'm not particularly worried about overlapping sequences, especially in corrective patterns, but what I am worried about is the fib levels. Okay, and I want to see chart formations that dictate that I should be either long or short or looking for a bias on that side. Okay, so again here, engulfing, this is our Marabuzzo, okay, which was rejected, moves lower, hits some support here at our EMA, engulfing, again moves lower, hits some support here at 161.8. Okay, so this is a bit of a history lesson, and then we've got a morning star formation. So 1, 2, 3, 4, overlapping 4, and then down in 5, and then this corrective sequence up. But the corrective sequence up was only mild, which basically shows that the downward trend is strong. I think it actually only retraced, let's have a look, to around 38.2% of the whole move. So we've got a retracement tool on. Okay, just short 38.2%. And then what we get is an inside Arami candle. So again, we've got these.
Netherlands at AAA stable outlook. That's picture firms in Netherlands at AAA stable outlook.
If anybody wants to hear that, so I'll just switch that off. Okay, so then we've got the inside Arami candle again, and then these bearish outside bars, and then the strong sell-off. Okay, now at the moment this still looks bearish. Okay, there was no reversal candles in here. We had an inside bar here. We've had a correction up, but then we've reversed and we've moved lower. Just clearing this, sorry. So Again, just looking back to fib extension tools. Okay, we've still got a fair bit of room to maneuver to the downside in this first wave sequence. So then we wanted to break it down again to dailies, and this gives us a bit of a better picture. And again, looking to this pattern, because remember we're looking at this pattern being the aggressive downward move. We want to use our retracement tool again, and here we virtually pip perfect to 38.2%. So this strong move down, retrace to 38.2%. And now I think that we're in the next sequence to the downside. Okay, we have broken we have broken trend support. We formed an evening star formation, which is a very bearish pattern. Okay, we've come back, and yesterday we just clipped our moving average. Now remember that we said that these moving averages, we use them as support resistance. So it just clips the moving average and then starts to move to the downside. So then we want to take it down through time frames again. Okay, and what did we get this morning? Again, we get, this is the move down. Don't think this first sequence is finished by any stretch of the imagination. Okay, sort of next areas to focus on 124.38. So we move up off this corrective pattern, and again looking for bearish or indecision candles. So we have these indecision candles to the upside this morning, and then we want to take it down to our hourly time frame. Okay, and again, that was just a trend line that I had on earlier. We actually had a signal to sell, I think it was at 36, and we ended up initiating it at something like 28. Because it stopped short. And again, this whole move up is corrective. Okay, so these are impulsive moves to the downside, trading with the trend. Okay, we're underneath cloud, we're underneath our moving averages. We then get outside bar, okay, which corrects us up, okay, and then we want to be looking for reversal patterns, for signals to sell, okay, around our area of resistance, and that's what we got this morning. So downside projection to start with, I think 124.38, maybe today, maybe tomorrow, and then talking about fundamentals, we're probably going to get a bit of a correction higher after or during the G20 meeting, bounce back up, and then another sell-off. So going back through the time frames, that's quite good, isn't it? Going back through the time frames, everything is pointing to the downside, and we should be selling rallies. Okay, so we should be looking at selling these rallies. And just to look at that Marabuzo again, we go back to the daily chart. Okay, so we've got a Marabuzo there. This is a previous area of resistance. Okay, and we stopped short, form this evening star formation to move lower. Okay, any questions about euro dollar before we move on to anything else? And by the way, talking about patterns, this is quite plainly just a three-wave corrective sequence. We might get a bounce here. Remember we said 124.38. I will do, but it's not one of the currencies that I actually cover in our room. Remember I said about a corrective pattern off 124.38. Here. What's doing that for? 124.38. If we get a corrective pattern off 124.38, what might we form? I don't think the correction is going to be that aggressive, but we could just get a bit of a head and shoulders formation before it moves back down to the downside. Yeah, it could be. Like I said, it's one person's opinion. I try to trade with the trend, and all my indicators at the moment tell me that the trend's to the downside. So I just go with the flow. I've got no reversal signals. Everything is trending under the 50. I'm not trying to fight the trend. I've got these decent reversal patterns, decent bearish patterns, even star formations. Trading 50 again on the daily, and trading under 50 on the hourly. So again, I would see no reason whatsoever at the moment for me to be looking to buy this pair. I've got no bullish patterns in there at all. No price action, no fib levels that tell me I should be getting long. Last month's candle was, or the month previous of May, I should say, is extremely bearish. This has been rejected, upside rejection. I've got 5 inside. Look for maybe 3 or 5 again to the downside. Like I said, it's three waves. I don't think the euro is going to disappear. I do think it's got maybe another 1,000 points to the downside to go before it does anything else. No, we're 90% technical analysts and 10% fundamental analysts. At the moment, there are no fundamental reasons why you'd want to really be buying euro dollar. I don't think they're going to come out with some sort of miracle pill this week. They've struggled to do anything up to now. In fact, it's been a complete shambles, really. We had Cyprus yesterday asking for emergency money again. I mean again because it's just another country that's struggling to finance itself, and it's been held up by one country. I think the best thing myself my solution for the euro problem would be to let or to get rid of Germany, and then everybody else can devalue the euro and be done with it. But you've got to remember, the Germans aren't particularly bothered about euro being weak either, because the weaker the euro, the stronger their exports. So are they really going to push that hard? I don't know. But that's, like I said, that's fundamental, not technical. So we'll just stick to the technicals at the moment. So we've got, coming back from there, we've got a euro negative, a dollar positive. Okay, so can we see dollar positive in other pairs? Well, I think dollar CAD is very relevant. So we'll look at that one next. I'll just refresh the chart because I know sometimes it goes off. Okay, so we've got dollar CAD. Again, messy trading, not too pretty really. Going back to our sort of reversal bars, this is an inside bar, this is an inside bar. This is actually an outside bar, actually up towards the top. But what this does look to me to be is a large flag formation. And what makes it more interesting clear that off for a second. Here's the fibs, okay? So let's take a retracement off here first. Let's get it fit perfect. This line here is 88.6%. Okay. Let's remove the fib. And we want to use our retracement tool around the other way. And this line here is 78.6%. So, what is it? Well, I think it's a channel. I think it's going to break to the upside. Can I get any more confirmation that it's going to break to the upside? Come here. A bit messy, but apart from this overshot here with this inside bar, so I just get my drawing tool on again. Apart from this overshot here through 78.6%, this looks like a bullish Gartley pattern. Now, bullish Gartley pattern target area is 61.8% of the whole move, so it has achieved that. But another thing to note here is obviously we're rejecting the downside. We've had a bit of a move back up, but what I think is important as well, okay, I'm just going to clear this, clear all of this so that we can see a bit better. We go to the monthly. Okay, so remember we've got this channel. This rally last month was extremely strong, and yet again we stopped short of the Marabuzo level. So we have corrected lower, but we stopped short of the Marabuzo. And if we take it down to dailies, to retracement. Okay, the move back is between 38.2 and 50%. It was a strong move up. This is in three wave pattern. And the downtrend is clearly broken. I think this move today is corrective. And I've still got a bias to try and get long. I'm not long at the moment, by the way. I'm waiting for the bias to turn again to the upside. So I haven't got any reversal signals on the hourly chart, okay? It's in a downward trend at the moment. Okay, we're underneath the 50 on the RSI. I don't have any inside bars, don't have any outside bars. For 240 minutes, I'm just rejecting the EMA. So again, it's a view, and I'm trying to trade to my view. But if I don't have signals to get long or short, then I basically stand aside. Okay, any questions about dollar CAD? So dollar CAD, obviously being a commodity pair, doesn't always trend in the opposite direction as Aussie dollar, but a lot of the time it does. So we'll have a look at Aussie dollar next, and then we're going to have a look at sterling dollar and sterling yen. and dollar yen if we've got time. Okay, let's refresh the camera. So here, this is a monthly chart. So again, we've got an aggressive move to the upside. This was an outside bar. Okay, very messy, choppy, which also makes me believe that this is not an impulsive move. It's more of a corrective pattern, but again, it's got plenty of room to maneuver to the downside. Now we've got two Marabuzo levels here. Okay, coming from this candle, October, and last month's candle, May. So even though we've spiked through it, we stopped at the exponential moving average. We're just breaking through 50 to the downside as well on our RSI. So weekly, what did we get last week? Well, we got a rejection again. So underneath, pretty solid resistance here. Two exponential moving averages, pretty thin cloud cover. But what we also had, okay, was this trend of lower weekly highs. So again, just talking about wave patterns. 1, 2, 3, 1, 2, 3, 1, 2, 3. I think we're coming up and then we're coming down here. Okay, so there's plenty of room to maneuver in this channel. Okay, three wave pattern correction, and then probably another three wave pattern to the downside. So targeting sort of towards 90 the figure in the big picture. So again, we've got a dollar bullish scenario for Aussie dollar. Now, breaking this down again, so I'll just clear that. It's more important than this trend, okay, is how we use the cloud cover, okay, we use this trend of lower weekly or lower daily highs, okay, to move back up. I think you all know what I'm going to say by now. In a three wave pattern, okay, and what do we get? We've got an evening star formation, which is very bearish to the downside. Remember where our Marabuzo was, okay? This is our blue line. So there is scope for an upside correction, which is just sort of pushing on the 50 on the exponential moving average, but it should be capped because we've got quite decent resistance level here, okay, which is the daily Marabuzo 101.14, and at this trend line Marabuzo, which is virtually 101 the figure. So that sort of 20 pip range, we should see very decent resistance to the upside. So again, taking it down through shorter time frames. As we move up, we want to be looking for reversal signals, and at the moment we don't have any. So we're in this corrective sequence. Put a trend on it. Any inside bars? Nope. Any outside bars? Nope. Okay. Worst case scenario on this pair, just noticed today that the short-term rallies stop at the open of the first candle of an evening star. Let's have a look at that. Which is basically where the support is here. Nice. Nice if that's true, and it's a great spot. And I'll look into that because we can obviously backdate all these charts. It's not a scenario that I've seen happen before, but if it is true, FX Vint, then it's fantastic. Morning star formation here. Let's just see if it is true. Morning star formation here. wasn't really at the bottom of the trend though, was it? Let's have the benefit of the doubt there. Anyway, I could be here all day if I keep on going back through here. We'll have a look later. But it'd be nice. It lines up as well, very well, with 101.14. Because the open of that candle is 101.24. So we've got that zone, a great zone there now then. 91 to 24 for potential sell signals. But she could well stop short. This is obviously an area of resistance 80. So we've got this whole zone trendline resistance here. So really from anywhere from where we are at the moment up towards here to look for sell signals would be the call, I think. Okay. Like I said, I can't make trade recommendations on the webinars. Might be worth looking at 240 on here as well, just to make sure. We're getting some pin bars, so we are getting rejections of the overnight high. You can see how aggressive the sell-off was as well. Okay. Again, sort of looking at wave patterns. One thing you've got to be very wary of is commodity pairs. So commodity pairs are anything with Aussie in it really, and anything with Canadian dollar in, because fib levels will get skewed a little bit because they can go to 423.6. So here you would have got a bit of a false one. So you've got 1, 2, it's actually 3, 4 that stops at 261.8%, and then a fifth wave extension. But it was a strong move lower, because it's so aggressive. Sometimes the retracements can only be short. And again, we've got that comes in at 97, 50%. So if she does move higher, so I'm not sure she's going to make it. Sort of 97, I would say 97.24 would be a prime area to sell this pair. So let's have a quick look at cable. Just refresh the camera again. Go all the way out to monthlies. Okay, massive move down, obviously, very strong. And then we form this channel, not channel, triangle. Okay, false breakout this month to the downside. What's happened on the move back up? So we've got, again here, we've got decent reversal. We've got inside bars, outside bars to take us up, and then this very strong sell-off, which it didn't really give much indication at all in any time frame, weekly, daily, 240 minute, that it stopped. There wasn't any fib levels in there, nothing that I could see. There might have been a darkly looking at that now, but if there was, I didn't spot it. So I missed the start of this large move lower. See what I'm saying about off the top? There's nothing particularly off the top that would have signalled the move back down. That probably looks around 78.6%. Again, it's overshot there. So, like I said, missed that move. But so again to the downside. So we've got this aggressive move. Then we've got this pullback. We're underneath the 50. Okay, inside bar. So again, warning us of a corrective sequence off this channel support, but the move lower can't be ignored, okay, because it is aggressive. Go back to monthlies. Marabuzo. Okay, so we know, and if you look back as well, pretty solid support here, resistance here, then support, and then breaks, so resistance to the upside. So on the weekly, and again it stops short, we're getting signaled, or we've got an indication of solid resistance here. And what we do again, which we do quite often, is we just use the EMA as resistance. So bash, 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 breaks, moves up to the next EMA, refuses the high, and then moves back down. Now here, a bit of a different story. I've been stopped in cable this morning. I called a sell trade. The correction's been higher than I expected it to be. Because I was looking at that reverse trend line. What happens a lot in trading is that the market will come back to test the breakout levels. So here, excuse me, here we've got this trend support. Okay, it then breaks to the downside. What will happen a lot of the time, it will come to retest and then break. What it looks like it's doing now is, as opposed to testing the breakout line, it looks like she's just tested this Marabuzo again. So my bias is still to the downside, but it's not anywhere near as aggressive as euro dollar. Okay, because you've really got to clear that monthly channel base or triangle base to really turn this pair, flip this pair back to the upside. So here was our resistance level. Again, not a great reversal formation yet. This has really got to break all the way down here to get the bias again to the downside. Just being held by the cloud at the moment. I'm going to look at sterling yen. Quickly. Okay, strong moves down, blah, 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 blah. The only thing that worries me about the yen pairs is possible intervention again. Okay, this is our area of support. Triangle formation, not sure about that, but this is the candle that we wanted to be concentrated on. This inside bar here. Okay, so last month's inside bar breaks to the downside, and then the bias is lower again. Okay, clear. And break it back through the time frames. Okay, decent move down. Again, if we look at these candles, inside bar breaks to the downside. This is an outside bar. They're not all great signals. This outside bar didn't break this trend. Okay, so it stops short and goes an inside Arami instead. Then we get an inside Arami here, and then we've moved to the upside. But what I do think this is, I think she will make this low, okay, this previous low. So again, it looks like an overextension. I'm not fanatical about sterling yen. I think the spreads are too wide, to be perfectly honest. I think that must be on your side. I think. Anybody else seeing two charts at the moment? I'll refresh my camera. So again, moving it back, this just looks like a three-wave correction. We've used the exponential moving average again as our resistance, as we used it as support coming back here, okay, after this morning star formation. So it's then resistance to the downside, strong sell-off. Any reason to think this is changing? No, none whatsoever. Okay, 1, 2, strong move down, 3-wave correction, next move down towards 123.03, I think. Again, not great bars in here. Nice 4-hour pin bar up towards resistance level. Like I said, it's not going to use it. It's not that sexy, is it? But this whole price action is choppy. Indecision, corrective, screams that we've got more to go to the downside. Okay, we'll have a quick look at dollar yen until Vicky throws us off. I've been thrown off a little bit in dollar yen. We called the move higher, and then I thought the move down was going to be corrective because I had a channel breakout in dollar yen, or what looked like a head and shoulders breakout. We called a sell today, but I didn't call a sell yesterday. I called a correction lower, so we didn't trade yesterday. We didn't lose any money, but still quite annoying. So you have to sort of, sometimes you just have to go sit back, reanalyze a little bit. Okay, so here, basically what I had is a strong downtrend, inside a Rami candle, moved back up, and then was watching this, and there was 2 reasons to get, or 3 reasons to get bullish here. Okay, we've got reverse trend line. So we take the trend off here. Okay, so it came back, it broke out with the downward trend, then came back to test, gave us an inside a Rami candle, okay, and then moved to the upside, and then broke this channel. So I was looking at this being a head and shoulders formation, so shoulder here, head here, and the target area is all the way up here. And we noted, if you can see in here, we noted that this fib is 261.8% inside fib, so let's clear that and go down to 240 minutes. So we had 1, 2, 3, 4, 5, and then I thought it was going to be a small correction and a move higher. But now what it looks like is that this is 5-wave sequence, 3-wave corrective sequence, and another 5-wave bullish sequence, and the whole pattern now looks like just a 3-wave correction. Okay, so we've now formed a decent outside bar, and we're getting continuation as well. 60 minutes. Again, outside bar at the top, inside bar outside engulfing. We get a correction here off this inside bar, but there's nothing to dictate again that this this negative trend that we're in on most currency pairs is coming to an end. Just wondering what to look at next. So we'll keep going until we get thrown off. Euro yen. The bears are back in town, aren't they? We did sell euro yen this morning, thank God. I had a target area 99.10. Now that's just going back to this intraday pattern. Sorry, my charts are looking a bit messy when you actually get down to the ones that are used. So I had a head here, left shoulder, right shoulder, breakout. This is the target, okay, 99.04. So it has actually reached the target area, but clear. And this is not long-term forecasting, it's obviously short-term forecasting. 4th wave correction, so going back to wave pattern. 1 here, 2 here. This is 3 waves, strong 3rd wave, 3-wave correction. Okay, and then this is the difficult one to do. Now we're looking By the way, you've got channel base here, okay, 98.50, so just be wary of that. 98.28 would be the full 261.8%. If she overextends on 161.8 and then we get the correction higher, it normally means that the fifth wave will be short, okay? So don't expect this fifth wave to extend past 261.8%. And what you can even do is just get another fib just on the fifth wave and just look how they line up, okay? So waves of waves of waves of waves, blah blah blah. Okay, and then towards here 98.25. Again, there's no indication that the upside is stalling. Oh, sorry, downside is stalling. Taking it back. Time frames. Let's get rid of all this. Rushing through now before we get. Okay, time frames. Bias is the downside. Just be careful because this does look like a wedge formation. Okay, but obviously while we're inside the wedge, and you've got to remember this is a monthly chart. While we're inside the wedge, she's still got plenty of room to move to the downside. So weekly, morning star formation. Move up towards resistance. Inside bar here. Going back to April, we argued that this was a false signal, this outside bar, just because we used correlation between dollar yen and euro dollar to dictate that the downside should prevail, and it obviously did. So, not blow my own trumpet, but fib extensions. Okay, so again, fourth wave extension there. I think we going back to this trend. Okay. Just a free wave correction, and then the downs. Get through this, be nice. But like I said, looking at short term, there's sort of pretty solid support just above 98 the figure. And then we'll probably just produce a little head and shoulders formation. Okay, so as we can see, we've got this solid support. So 98 the figure, we've got previous lows. Okay, so everything's around here, around 98.30. So what I think is going to happen is see a next move to the downside. This just being a minor inside wave. Okay, Maud, he's just telling us it's the end of the webinar. I hope you enjoyed the forecast. Hopefully Maud might click in a link to our website. We're offering a trial offer at the moment, normally £75 a month for our analytical reports. It's a trial down to £25 a month at the moment for a 1 month period. Okay guys, good luck with your training. Trend is your friend, but just be very wary when the trend is over. I'd love to come to the ITC next year. I wasn't invited. We'll talk to Maud about that. Okay guys, take care, and I'll speak to you next week. Okay, cheers, bye.